Yo, what's going on everybody? My name is Ryan and I'm a CPA, and today I'm going to be talking about the charitable contribution deduction. This is basically, the money that you contribute to a charity or things that you contribute to a charity. I'm going to talk about how it's deductible, what the limitations are, and actually what kinds of things would be deductible and what kind of things are not deductible. So a charitable contribution deduction is a deduction that you get on your taxes for donating money or things to a qualified exempt organization. A qualifying organization is, for example, a 501c3 organization that is recognized by the IRS as being tax exempt and serving a purpose to better the community around it. And as I just mentioned, you can donate cash or non-cash items, and there's limitations to both things, so let's just get into the cash donations. So when you donate money to charity, you get to deduct the donation as an itemized deduction, all right, and that's on your personal taxes. So an itemized deduction goes parallel with the standard deduction, whereas if you don't have enough itemized deductions, you just get the standard deduction on your taxes, and every person basically gets a standard deduction at least. Now, if you have things like mortgage interest or real estate taxes or charitable contributions, then you may be able to have enough deductions to get an itemized deduction. And itemized deductions are just these things broken out, and it would be more favorable for you to pick an itemized deductions as long as the total of your itemized deductions are greater than your standard deduction. So with that being said, and how itemized versus standard deductions work, charitable contributions fall under the itemized deductions. So if you only donated like $10 to charity in a given year and that's your only itemized deduction, that's not going to be actually tax deductible to you, because your standard deduction is about $12,000, but you only donated $10 to charity, and if that's your only itemized deduction, then that has no effect for you. However, if you donated $10 to a charity and you had, let's say, $11,000 of mortgage interest and maybe $3,000 of real estate taxes, then just by your mortgage interest and real estate taxes, you already have more than your standard deduction. So your $10 deduction to charity would now be deductible to you. So just think about how all that works. If ideally you're donating to charity because you want to help out the charity, and you're not doing it just for the tax deduction. If you're doing it just for the tax deduction, then you're not helping yourself, because you're paying more in the donation than you would be paying for taxes. So either way, a cash donation or a non-cash donation goes under your itemized deduction area. Cash deductions are limited to 60% of your AGI, and there's different rules for 2020 and 2021, but moving forward, it's going to be 60% of your AGI, and just keep that in mind when you're making deductions. And 60% is quite a high limit. Like, think about if you're making $100,000, you can donate up to $60,000 that year for it to be qualified for it to be deductible. Now, if you donate more than that, then whatever excess you have will just carry forward to the following year until you can use it up. If you don't know what charity you want to donate to, but you still want to donate money, you can set up what's called a donor advised fund, or commonly known as a DAF. And a donor advised fund is a vehicle where you can donate money to, you get the deduction, and once the money is in that vehicle, you then get to choose which charity to donate to after the fact. But the key is you get the deduction as soon as you donate the money to the DAF. So if you want to systematize your giving, it's a good vehicle to use if you're not sure, which charities you want to donate to yet. All right, now let's talk about non-cash donations, as it's a little more, just slightly more complicated, not too much more. But non-cash donations are limited to 50% of your AGI versus 60%, and that's the top end of it. There's limitations that are up to 30% or even 20% of your AGI, depending on what you donate. And I'm not going to get into that because those items are not as common, to most taxpayers. So let's say your non-cash contributions are limited to 50% of your AGI. Basically, if you donate value of things worth $500 or less, then it's a simple reporting on your Schedule A itemized deductions. If you donate things over $500 but under $5,000, then you need a Form 8283 to go along with your Schedule A. And if you donate items or groups of items valued at over $5,000, then you're going to need the Form 8283 along with a qualified third-party appraisal in order to properly report that deduction. And people ask me all the time, what about if you donate a vehicle? What are the steps to donating a vehicle? So first, you have to find a charity or a place that accepts vehicle donations, and at that point, you don't actually get the deduction. The charity has to then sell the vehicle and issue you a 1098-C, with all the information that the charity is supposed to report to you, such as the VIN, the year and make of the model, and the sale price of the vehicle. And so you only get to deduct the donation of the vehicle once it's sold. Okay, so that's the tricky thing with donating vehicles. So sometimes people would rather just sell the car and donate the cash to a charity of their choice rather than donating the actual car. And this goes along with boats and planes, because these are motor vehicles. You can donate any of those things, but if it's a motor vehicle, they have to go through that process. All right, another common question I get is, can you donate your time? Like if you're a construction worker and you value your time at $75 an hour, could you deduct that time if you worked at a charity, or you volunteered at a charity to help build houses and to help remodel homes and stuff for lower income folks? Well, the answer is simply no. You can't donate your time. You can't deduct your time. That's never a deduction, okay? Because anybody can make up the value of their time and write it as a deduction. And so, and that would be kind of discriminatory. Like, what if you're a construction worker, you get to deduct your time in that scenario? But what if I wanted to volunteer for, a charity that builds houses and stuff, and I'm a CPA? What if my time's valued at $500 an hour? I'm using that time to build houses for people. Like, will I get to deduct my time at $500 an hour? Would it be $75 an hour, which is let's say the market rate of a construction person? No, it's never deductible when you're volunteering for your time for a charity. Another thing to keep in mind is that if you're a business, and you have office supplies or just general supplies that you already deducted on your taxes, on your tax return, and you deducted those things as an expense, you then go to donate those things. Well, that's technically won't be considered a deduction, because when you purchase the item as a business, let's say you purchased the computer monitor, you most likely deducted that item on your P&L as an expense. So you already got the deduction for that. Now you go and donate it to charity, you don't then get a second deduction for donating that item. So keep in mind, when you're a business and you are donating goods, be very careful about how you report it, okay? And also, if you're a business, if you're a sole proprietor, a partnership, an S corporation, or a single or multi-member LLC, any charitable contributions that the business makes will actually flow to the shareholder or the partner's individual tax return and reported on the Schedule A, subject to the itemized deductions, all those limitations there. So please don't perceive businesses donating items or money as a way to circumvent the Schedule A limitations, because it won't. The only type of entities that get to circumvent that are C corporations, which doesn't make sense for most small businesses to be C corporations. All right, and a common thing that I see happen on tax returns are GoFundMes. Now, GoFundMe is an organization that helps people and charities easily collect money from the masses of people. So there are a couple types of donees on GoFundMe that may be tax deductible if you contribute to them. So if actual charities are having fundraisers on GoFundMe, then those contributions that you make to those charities are deductible. You know, like I said, GoFundMe is just an easy way for people to donate money directly to charities or directly to people, and an easy way to get a lot of people to donate money to charities or people. So if you're donating to a charity, a qualified charity that just happens to be on GoFundMe, that will be a guaranteed tax deduction. But if, let's say, your cousin Jim Bob just broke his finger and he's sad because he can't play Call of Duty for about 3 weeks, so he set up a GoFundMe account to help fund his broken finger because he's sad. Or any example of, like, a family loses their house in the fire, and so somebody sets up GoFundMe for them so they can live and properly get their shelter and food and clothing and stuff while their house gets rebuilt. These personal GoFundMes are typically not deductible. They're more considered a gift. So whether it's Jim Bob with his broken finger or the family that lost their house in the fire, those, if you donate money to those people, those will not be considered tax deductible. So be really careful with that. Again, hopefully you're donating money because you want to help them out and not just for the tax deduction. So, regardless of your reasoning behind it, just be careful of how you report it to the IRS, if you even can report it to the IRS. So just keep in mind there with GoFundMe, discern between the charity fundraisers and the personal fundraisers. All right, that's all I got for today for charitable contributions. Hope this video was helpful. If you found it helpful, please smash the like button and also share it with somebody who you might also think may find it helpful. And also, if you're new to this channel, please consider subscribing, as I'm going to be trying to put videos like this out every week that will hopefully educate you and maybe entertain you as well. All right, so that's all I got for today. Thanks for joining me. Again, my name is Ryan. I am a CPA. Take care for now, stay safe, and I'll see you next week.
Move for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him I'm a flicker.